Welcome back, everyone. I'm absolutely thrilled to have you here for this executive briefing explainer. Today, we're unpacking a massive financial event that's been making some serious waves, the initial public offering of Laser Power and Infra Limited. If you follow the financial news, you already know there's a ton of buzz around this. But look, instead of getting bogged down in hundreds of pages of dense financial jargon, we're going to extract just the pure, essential facts straight from their red herring prospectus. We're breaking it all down step by step so you know exactly what's on the table.
Okay, let's dive into this. Here's our roadmap for today. First, we'll meet Laser Power. Second, we'll break down the IPO structure. Third, we'll look at the selling shareholders. Fourth, we'll cover the important risks to consider. And finally, we'll wrap up with the key dates and deadlines.
Section 1. Meet Laser Power. Before we get to the millions of rupees, we need to know exactly who is behind this massive filing. So whenever you see that distinctive red and blue LC mark, you'll know exactly who we're talking about. Laser Power and Infra Limited. But how did they actually reach this monumental milestone?
Well, their corporate evolution goes all the way back to a pretty humble incorporation in 1988 out in West Bengal. Back then, they were known as Laser Cables Private Limited. Fast forward a few decades to 2016, and they updated their identity, changing the name to Laser Power and Infra Private Limited. But the really pivotal moment for our discussion today happened quite recently, in 2025. That's when they officially converted from a private company into a public limited company. This specific move in 2025 is the exact catalyst that set the stage for their current leap into the public markets.
Section 2, breaking down the IPO. Boom, just look at that number, $7.420 billion. That is the top-line figure, the absolute total offer size of this initial public offering. I really want to emphasize the sheer scale here to grab your attention. When a company steps into the public market offering over 7 billion rupees, it's a huge deal that requires a highly strategic approach. But, this massive number isn't just one giant pool of money.
And this brilliantly illustrates how that massive 7,420 million total is actually split. It goes into two very distinct buckets. We have a fresh issue amounting to 5,420 million and an offer for sale making up the remaining 2,000 million. Now, if you aren't an investment banker, those terms might sound a bit academic, right? So what do they actually mean for the money?
Let's translate that into plain English. A fresh issue means entirely new shares are being created, so the capital raised from that $5,420 million bucket goes directly to the company itself to fund its growth and objectives. On the flip side, an offer for sale, or an OFS, means existing shares are simply being sold. That means the $2,000 million goes straight to the specific existing promoters who are basically cashing in some of their chips. Section 3. The selling shareholders. So, who exactly is behind that offer for sale portion we just defined? The shares are distributed among three key individuals. Deepak Gell holds the largest piece of the pie, offering shares aggregating up to $1,125 million. Devesh Goyal is next in line, offering up to $625 million. And finally, Rocky Goyal is offering shares up to $250 million. Put all this together, and you get the entire $2,000 million offer for sale bucket. Now, pulling off an IPO of this scale takes some serious institutional backing. Orchestrating this whole process are the book-running lead managers, IIFL Capital Services and ICICI Securities. Their vital role is basically to act as the financial architects of this IPO. They assess the market demand, manage the complex book-building process, and ultimately help determine the final offer price based on how investors actually respond. And keeping all the massive amounts of paperwork and allocations in check is MUFG In-Time India Private Limited. They're acting as the registrar to the offer. Think of them as the administrative backbone of the whole operation. They handle the processing of your applications, ensure shares are allotted correctly, and process any refunds. They basically make sure the actual mechanics of the offer run smoothly. Section 4. Important risks to consider. Okay, let's deliberately slow down for a second for a reality check, because we're objectively reporting facts from the prospectus here. The document explicitly outlines several fundamental risks that any prospective investor absolutely must consider. First off, this is the company's first public issue, meaning there's been no formal market for these equity shares before today. Second, while the face value of the equity shares is 5 rupees each, the actual offer price you pay is in no way indicative of what the market price will be after listing. Third, they clearly state the general inherent risk of equity investments. You shouldn't invest unless you can afford to take the risk of losing your entire investment. And finally, keep in mind, these shares have not been recommended or approved by SEBI, the Securities and Exchange Board of India, nor does SEBI guarantee the accuracy of the prospectus. To really hammer this home, I want to read a direct quote straight from the prospectus itself. No assurance can be given regarding an active or sustained trading in the equity shares, nor regarding the price at which the equity shares will be traded after listing. That is absolutely crucial to understand. It emphasizes the complete lack of guarantees in the stock market post-listing. Once it's out there, the open market totally dictates the price.
Section 5. Key dates and deadlines.
Let's pick the energy back up because we are moving into the highly actionable sequence of events. So, the crucial point is this exact timeline. Get your calendars out. Wednesday, July 8th, 2026 is the anchor investor bidding date. The very next day, Thursday, July 9, 2026, the bid and offer officially opens to the public. You then have the weekend to think it over, and the window tightly closes on Monday, July 13th, 2026. If you're planning to participate, this is your concrete countdown. We've unpacked the origins of the company, the sheer $7,420 million scale of the offer, the exact split between the fresh issue and the selling shareholders, and of course, the very real risks involved. You now have the structured facts directly from the source. The question I leave you with is this. With all the numbers, structure, and risks laid bare, is this high-voltage offering the right addition to your portfolio? Take this knowledge, dive into your own financial research, and find out. Thanks for joining me on this explainer, and keep learning.